Good morning.
Wow, what a day it is to talk about the currencies, huh?
Man, what a time to be talking about currencies just in general, man. We've had some great interviews over the last couple of weeks, and yeah, we got some action today in a big way, man. Where do you want to start?
Well, I think we should start kind of where we left off with how the oil trade and the interest rate trade are really driving the currency pricing right now.
Nice.
So it's very evident with the Japanese yen. Like if you look at the US dollar yen, it's right below making higher move highs again. Yesterday, it planted a higher move low on the daily chart. It's been a bull since the beginning of the year. Now when we were talking right at the end of the year, we had Brexit, and now we have post-Brexit. And we were talking about how divergence was definitely going to come into play as we turn the course of 2020 into 2021. So we've had all that confirmed now, and I think we really are starting to set our trends, because we all know that higher move highs and higher move lows is a bullish trend, and the contrary for bearish trends. And all the currencies now are establishing those on the daily. So whereas we had the monthly and weekly trends that were very strong, basically being dollar bearish since last February, we've had a bounce, and I think you're really going to see that extreme difference come into play now. Since we talked last week, the 30-year Treasury bond is down another 3 handles already.
Yeah.
So, and that's keeping, no matter what, that's going to help the dollar in the long run against most currencies, except for, remember, we're talking about this oil trade. So yeah. I think that you really need to, and your followers should look at this now in the sense of where bullishness and where bearishness really resides. And it's all oil and interest rate indicative. So that's why the pound right now, it made a really high spike to higher move highs. Every single day this thing is grinding higher. And even today, the dollar index is slightly higher, only because the pound has fallen off of that, But if you look at, if the dollar was so weak, the euro and other currencies should also be making highs versus the dollar. They're not. It's only the commodity-driven ones, like the U.S. dollar Canada. It's getting pounded. It just continues to fall down. Like when I do my videos, when I go over to Canada trade, all I do is tell people, unless you get a super valid buy signal in the Canada, you really have to wait for a turn in oil and some other things. Like, this trend is not going away, and I don't think it's going to go away for the rest of the next 3 to 6 months either. So I think that you're going to see the Canada continue to rally versus the dollar. You're going to see the British pound continue to rally versus the dollar. But this impacts, and also Australian dollar and New Zealand dollar, But the other currencies, not so much. Now, the euro is coming into a lot of problems besides the socioeconomic dynamics of what's going on in the EU. Post-Brexit, remember, the UK doesn't have to fund the EU anymore, So yes. In the euro, if you're looking at that, I always say the markets are the best indicator of the markets. And when you look at the euro versus a lot of currencies, it's starting to have divergence and weakness, Like the euro is starting to trade in a kind of a range. Now, if the dollar was a bear, okay, the euro should be making new highs. It should be trading up at 122, 123 right now. It's not doing that. Okay. Yeah. So, and I think that if you're a euro US dollar trader, use a lot of caution and get ready for a lot of choppy range trading moves, because I don't think you're going to see any real big bullishness in the euro unless you have a big rally in the 30-year Treasury bond and a big break in the oil prices. That might help the euro a little bit, and maybe if you see the pound go down versus the euro, but that's not going down either. Like, if you look at the British pound, it's a raging bull against every currency out there. So, and the dollar index is a reflection of that, So, like, while we had this little bounce, we're upticking today, it's because of your broad-based currencies, like your smaller ones that are rallying. Like, you have like your peso, and you have the Turkish lira, and then you have other major weights like the yen and the Swiss that are rallying are falling against the dollar. That's what's propping up the index. So, and interestingly enough, and this is where I think you can really start to see the divergence in the dollar. You have to focus on this now. The U.S. dollar yen trade is in a rally mode, okay? The U.S. dollar Swiss is also in a rally mode. That made higher move highs today, okay? So now there's 3 flight to quality currencies for your trading zone. One is the Swiss franc, one is the Japanese yen, and one is the U.S. dollar. Well, we know the U.S. dollar is under pressure because of the pound and certain oil currencies, but with the Swiss, it's rallying. Now, is it going to be a major bull? I don't think so. But the fact that it's trending higher, that's restricting the euro, and then the fact that the U.S. dollar yen is also trending higher, a flight to quality. If those two flight to quality currencies are lesser than the dollar, that means we have flight to quality going on in the dollar, and especially because the bond market's collapsing. If the bond market's collapsing, where do you go? You have to go to the dollar. You know what I'm saying? So, sure. Except for if you're trading the pound. So I think for your followers out there that are watching or to trade the currencies, they really need to be mindful of the oil trade and the interest rate trade and the trends that are going on right now, because the central banks aren't doing anything. I've never seen the bond market do what it's doing right now. You have no central bank action whatsoever. I mean, over the past few months, you've seen an erosion in the debt market and the spreads. The spread between the short term and the long term is so stretched right now, and it still keeps falling. I was short. I got out. My targets were hit. I woke up this morning. I'm like, how is this thing down another basis handle? I'm like, I just missed out on another $1,000+ move in a day because I didn't think it's overdone. Long term, I'm a bear, but I was looking for a short term, at least choppy bounce. We're not getting that.
No, even the 2 years basically almost doing nothing today, right? You got the 5-year up 3 ticks in terms of yield. You got the 10-year up, just more than that, and you got the 30-year up almost 6 ticks. It was up almost 8 ticks, and like you said, man, you put that 30-year on a chart, and it's like, my goodness, man, you got. Today's. Like you said, the moves have been pretty amazing in terms of lower price, higher yield. And today we just got a gap away that just, is decisive on this chart. And it's very difficult to be decisive on this chart when you just traded from 183 to 163, and just like that, boom, we're down at 158.30, the low in the 30-year today. It caught me off guard in a big way as well. I kind of woke up and said, whoa, man. They were talking about it on Bloomberg super early this morning. I said, man, this move is pretty remarkable.